as a prior hedge fund manager, what do you think of the Archegos capital implosion? Looks like a lot of financial firms are going to be impacted. Does today present a rare opportunity to scoop some financial stocks, or do we need to wait for a few more days? And I think on the call, you described this as episodic and non-trending, which is what it looks like to me. This firm was actually a family office. It was Bill Hwang, who used to run Tiger Global. I think he had about $10 billion in capital, and then probably had that levered 3 to 4 times. So you potentially have 40, 50 million of capital and very concentrated names focused on media, Chinese stocks, and I think there are a few catalysts. One was China, which we talked about a lot, and sort of your signals have been saying it's get out of the way. It's not long anymore. About a month ago, and then basically Viacom, which is one of his largest positions, did I think a secondary, which took the stock down. So he had this concentrated, levered, long side of his portfolio, which basically just kind of all at the same time started going down. And then I think Goldman was the first firm to basically ask him for more capital. So then it led to sort of a series of capital calls. And the impact on the banks was actually that a lot of these positions were in swaps. So the banks ended up being, this is what you're seeing from, I think, Nomura and Credit Suisse were the big holders of the swaps. So they've announced that they're going to be taking a little bit of a hit. So the question is whether this is something bigger or it's one very large fund having to unwind. And you saw a lot of action last week and really kind of preceding last week in the China stocks.
Yeah, I mean, it all came from someone.
Yeah.
So let's just start top down from that and then come back to the very eloquent explanation, Josie. Nice job on it this morning. I saw you were up at the top of the risk management morning, tweeting away.
Yeah, I got a lot of sleep this week. When I have my daughter, I can't really go out and drink or anything. We have great days. We get to bed early. It's that's the benefit of having children.
Pretty much the opposite of me. I was at a hockey tournament with my son, and my wife and 3 daughters weren't there, so I was like getting it after it every night. That's what you do watching tournament, NCAA tournament stuff. Anyway, so the bottom up is what it is. Today is a buying opportunity in something like Goldman Sachs. Right? Goldman Sachs is going to get to, should be if it opens where it's indicated. Low end of the range is like around 320. Yeah. So I like Goldman because I like the financials, and I don't think that I'm going to sit there and trade it like Johnny Unicorn or whoever, Johnny Macro Tourist out there, who's like reading these things and, oh my God, this is bad for Goldman Sachs. It's not bad for Goldman Sachs. Goldman Sachs was actually the first firm to come out to, again, and I know some hedge funds really well whose prime brokerage account is at Goldman Sachs. So they were actually, Goldman's awesome at this. They were the first ones out there making sure that their clients knew. So guess what? They got all the trading commissions on all the blocks. Yeah. So, Goldman's the way to play it on the long side. But you never take, well, I shouldn't say never. If it's long-term capital management, it's one thing. But if it's Bill Hwang's family office with leverage ratios that are probably too high for quad 3 in China, Bill, which I would submit respectfully, being respectful this morning, that you should have known it's quad 3. So top down, what really happened here? One dog barks and all the dogs bark in China is really a predictable pattern when you go from quad 2 to quad 3 in China. Don't forget that China had a run of almost 10 straight quarters, or I'm going to have to go back and look at the quad map. But again, look at slide 20. China was on one hell of a run, and they're phase transitioning into economic stagflation. That's quad 3. That's the first country we went bearish on. So if you go back to China, look at that run that they were on. They're a 1, 1, 1, 2, and now they're in a 3. So that Bill should have known. You should not be getting levered up long China into that. You should be taking down leverage and running neutral to short China. Now, a lot of people are going to say, hey, yeah, thanks for telling me, Mr. Quad Map. It's like, that's what we do, right? I don't got any problems along China ADRs trying to say, well, if I look at the valuation, no, that's absolutely not the way to do it. We're short Viacom, like Andrew Friedman's bearish on Viacom. You want to talk about that instead of Chinese ADRs? Whatever. If you got all those issues together, that's just called the guy blowing up, right? And you should, again, what you notice intraday, because everybody knew. I was in a car going to Syracuse for this hockey tournament. Everybody knew. I was multiple phone calls I was on. Jamie Bruno was sitting beside me, and he's laughing because different PMs are talking to me. And I said, well, obviously, as soon as this is cleaned up, the market's going to go up. So again, that's the thing. When somebody gets a margin call, once the block's clear, the bottom's in. They clean it up. The mop's in. Market went up. That's partly why the market ripped into the close, S&P did, on Friday. Don't forget that the S&P is also the street's net short position against their super duper long picks. You don't get to become Bill Hwang saying my best idea is long spies. No. Most hedge funds are short the index because they got their face ripped off on their high short interest longs in January. So you want to talk about connecting dots, that's what we're connecting here. And you got two people, Jonesy Buds and I, that collectively we have like almost 45 years of experience in the hedge fund business. That's old. We're getting old. Old crusty guys.